Hello, everyone. So we are here today at Citizens Bank. Celeste.
Hi everyone, Mateo here.
And we're here today with James Chen. It's a pleasure to have you here today, and thank you for meeting with us and giving us some insight about what's going on in the world.
The pleasure's all mine. Thank you so much.
Yes, absolutely.
absolutely.
Light topics today.
Yes, yeah, Mateo's right, very light topics. And thank you for lunch as well. So we appreciate.
I'm glad you guys like pizza.
Yes, we appreciate we're able to have a nice slice of pizza as we popped in over here today, because sometimes we do not get lunch. So that was a nice bonus. So Mateo and I have worked with James a number of times over the years. I think I first got introduced to you due to some challenging buildings and like small buildings that I was trying to see if lending was possible on, and then it's grown from there.
Yes.
So yeah.
I remember it was a co-op, and it was
Yes.
had to do with the share, the pro rata share.
Yes, yes. So we've dealt with the pro rata share on a number of things, and then I think also in the West Village, like some smaller buildings, which
Correct.
can be a little bit more challenging in terms of financing. But start us off. Like, tell us about how you got into the mortgage industry to start, and how long you've been doing this, and what brought you to Citizens Bank.
Sure, absolutely. Wow. Next year will be 20 years as a loan officer.
Wow.
Nice.
Congratulations.
Thank you. So I started off. My parents they needed financing, and they were busy with their business, and I was the oldest. So I was appointed to the task to help them out to study which bank to understand what rates and product.
Okay.
And we closed.
Okay.
But I grown to like the business. I was intrigued, and actually took a class in NYU about mortgages.
Okay.
And after that, I applied for a job at Citibank. That's when I first started as a loan processor. I was there for a year, and then I transitioned myself to a loan assistant at another loan officer at Washington Mutual.
Okay.
I was there for another year, and then an opportunity come that was available to be a loan officer at a brokerage, so I took it.
Okay.
And I've been with that company for 10 years. And then because of 2008, the market kind of changed a little bit. I'm
course.
pretty sure you heard that. You remember, right?
We're all aware. Yeah.
Right. So we had to. We became mortgage bankers,
Okay.
and then we were there for a few years. And then after that, I moved to Citizens Bank. So I've been with Citizens for the last 7.5 years.
Very nice. Okay. And Citizens had some changes as well, right? Like how? So explain the scenario with Investors Bank too.
Sure.
Yeah.
So this year, 2022, Citizen acquired the retail branch from HSBC.
Okay.
So we didn't. So a lot of people thought that we just took over the bank. No, we only took over the branches.
Gotcha.
So HSBC still exists.
Mm-hmm.
They still have couple of, I think they have like 3 or 4 branches. They
Okay.
call the World Center, but we took most of the rest of the branches.
Okay.
2023, spring of next year, Investor Savings Bank, that we bought the entire bank. So
Okay.
that's going to be converted to Citizens Bank.
Okay,
Yeah, so we're going to
nice.
have more green sign in New York City now.
Okay. Awesome.
We'll be
That's
on the
great.
lookout.
Yes, for sure. It's interesting because the first co-op that we bought in New York, we had Citizens. Then when we refinanced, we had Investors, and in theory, we're basically back to Citizens again.
Yes.
now. So it's
Yes.
so all paths are kind of leading us
Going
back
back
to
to
Citizens
Citizens.
Bank. Yeah,
Yes.
absolutely.
Yeah.
And now, obviously, like right now, it's a crazy time. I mean, I think one of the big questions that everybody has is like, what's going on in the mortgage industry? Of course, what's going on in the housing market? We're getting that question all the time.
Right.
I mean, what are you from like being on the front lines? Like, what are you seeing? What's kind of your prediction? Thoughts about what's happening? Any feedback for the general public?
Anything
so to
we're
speak?
missing?
Yeah.
Yeah, so people always ask, oh, what's the rate today? What's the rate
yes,
today, right?
Of course.
So, I mean, granted, last 2 years it was all-time low, and I think we're all spoiled. But if
Yeah.
you look at the historic rates, actually, it's not. It is high compared to last year, obviously. But if you compare in history, it's not.
Yeah.
Okay. And I always say this to my customer, when I get on the phone. I can give you 1%, but if you don't qualify for the payment, it doesn't mean anything. So let's talk about the payment. Let's not focus on the rate, because the rate is going to be the rate, and we can always refinance down the road, because it could be 7% today, but it isn't going to be 7% 2 or 3 years from today. When the rate drops, I can always refinance. But most important is, are you comfortable with this payment? You know, and if you are, let's talk more. You know, and from that point, you know, I'll make sure that they understand what the payments are. We have various products. We have fixed rate. We have adjustable rate, and what fits your budget, what fits your lifestyle, and that's probably the best way. You know, because you date the rate, but you marry the house.
Yeah, exactly. Yes, that's an expression that we've been using very often. I like that. So you guys heard that. You date the rate, but you marry the house. So if you're not happy with what the rates are at this point, but because we all know it's a buyer's market right now, if you're able to get a good deal on an apartment, as long as you're comfortable with what the current rate and the payment, as you were saying, is, to be able to carry that for now, you can always eventually refinance and, you know, and then have a lower rate in the future. So it's that actually gives you, when you think about it strategically that way, it gives you the opportunity to take advantage of a buyer's market, and know that there's opportunity to, you know, potentially down the road have, you know, a different rate. I mean, but I agree with you. I mean, the rates were so low, it was impossible. It was going to stay like that forever. We all know that. The first house I bought in New Jersey back in the day was at 6%, and I remember I was happy with that. But I'm dating myself a little bit with that. But you know, I mean, now we're back to that mark, but eventually that will shift as well. So
absolutely,
Whereas you might not get a break on a purchase price.
Exactly.
And,
yes.
you know,
very good point.
I don't think if we even look back in the past, you know, we haven't seen, you know, deals like that. So I think it's just like in every market, you know, we look for the opportunity.
Yeah, absolutely. Like, ask Mateo and I, you know, at a different time, like how often buyers markets have come around.
Right, exactly.
So take advantage of this
I'm
now.
enjoying this one for my buyers, that's for sure.
Take advantage of this now, so that way you're able to get a better rate down the road
Exactly,
too.
and as long as you're comfortable with the payments, right? There's something you can work around with, and there's different type of product that can help you. And a lot of times, you know, I realized some of the customers, they didn't even realize that the mortgage interest and the property tax, it's part of your tax deduction.
Correct.
So when I mentioned that to the customer, I said, really, I can do that? Well, that's added bonus, because now they're not paying rent. Because guess what? With rent, you're never going to get that money back.
You're not getting to deduct anything either in terms of your rent. There's no tax deduction on,
and paying rent is 100%.
And those have gone up too.
Yes.
There you go.
So now you were talking a little bit about like different products and everything you have. So I know you mentioned, you know, obviously everyone knows about like the 30-year fixed, but adjustable rate. I know Citizens has often been a go-to of mine, of course, when there's, you know, more challenging buildings to be able to finance as well. So can you talk a little bit about like some of the, or I guess if you want to rattle off like some of the different products that maybe people aren't even aware that Citizens Bank offers?
Sure, absolutely. So we offer the traditional Fannie Mae, FHA, VA loans. Co-op, condo, 1 to 4 family, primary, second home and investment. But some of our niches are, we do debtor loans. We can go up to 95% financing for debtor loan with no MI, which is huge. We do construction to perm. We can, if you have a piece of land or you're going to buy a piece of land, we can potentially finance that land plus the cost of building a house on top of it. Right? So construction to perm or renovation, which will, you know, if you need $100,000 to renovate a house, we'll give you that money and to renovate the house. We also have jumbo loans where we can go up to 90% financing, up to $2 million, interest only. Now I want to talk a little bit about interest only. Interest only is a program that I think a lot of people they don't understand, and they think, oh my God, I'm only paying the interest, and it's a bad thing. Actually, it's not if you understand the concept. So with interest only, you are only paying the interest based on the principal that you own. And there's no prepayment penalty. So if you pay extra every month, that following month, your monthly payment actually will go down. So it's good for someone who's like a banker. They get a base salary, but they have, or commission person, right?
Of course.
Yeah, they get a lump sum and they can just pay down. And then guess what? The following month, the monthly payment will be lower.
Interesting.
But and you're only paying the interest up
Yeah.
front, and for the first 10 years,
Yep.
and after that it's 20-year payment because you got to pay off the mortgage at some point. So the
Yep.
first 10 years it's fixed rate. You pay the interest, and again, if you prepay, there's no prepayment penalty,
Okay.
and it's give you that better cash flow.
So basically, somebody could do something such as be comfortable with, say, their base salary with a particular payment for interest only, but then when they get their, say they're in finance, like you were saying, a banker, they get their big lump sum, or you're a real estate agent, you get your, your huge deal of the year, you can then just apply a large amount to try to pay that down.
Correct.
So it sounds like, with interest only, it could really, you have to be disciplined.
Right.
But if you are, and you're able to kind of set up, it almost allows you to then have your own game plan in
Right.
terms of what your year is like, what your future is like.
You better leverage your own cash, right?
Yeah,
you can control where you wanted to invest. Maybe you don't want. I have this customer. I remember he was telling me, "Oh, I'm gonna rather than spend, paying off the principal, I'd rather take this money, invest hours. I get a better return."
Right.
And that's depending on your preference.
And I'm thinking all the gig economy workers now too. You know what I mean? Where that also isn't always, that can be, they may have had a couple projects, and that, that's coming in. That's great. So let me pay forward, and then take a couple months of the mortgage.
Yeah, absolutely. That's an interesting, and I think like probably around 2008. Like interest only and stuff like that got like a bad reputation. Like there were a lot of loans that got people got like wary of them. So
or they
to
were doing
speak,
a lot
right?
of subprime.
Yeah, okay,
And,
yes.
and with today's regulation, those programs are mostly for investment products, not for not for primary. So it's not the same.
Yeah.
But if you understand, like you said, you have to discipline, right?
Yes.
Right. So as long as you understand the product and you discipline, and at the end of the day, you have to be comfortable with the payment, and it's a good product to have. It gets you into the door, and then if you make that payment and you discipline, you will get it. It's good.
Absolutely. It's kind of about that. Sometimes being able to take advantage of a good buyer's market to get you in. Knowing that you have like a long-term plan. Now in New York, have you seen, or most of those say condos, or have you seen any co-ops except like the interest only? I'm just curious. We can always investigate this part too as well.
I actually have.
You
I
have?
have.
Okay.
They have not had a problem yet.
Because it's interesting. I haven't thought about that for co-ops, and it's case by case. I'm sure it's going to vary for every co-op.
Right.
But I think that's something we should probably investigate because it may make it a little bit easier with the buying power situation for a first-time home buyer to get into a place as long as they're doing like a good down payment and stuff. Maybe a co-op would be okay with it.
Yeah.
So
And here's the thing: 10-year fix it's
Yeah.
a long time.
Yeah.
And I had customer that I want a 30-year fix, but like 3-4 years, well, they either had a kid or they got married and they want to move to a bigger place. So
absolutely.
it's not the old days where they stay in the house for 30 years anymore or longer than that. Like I feel like I think there's an article I read every 6 to 8 years, people move to a different place. Yeah,
absolutely.
Yep.
And New Yorkers in particular, I think, move more than we could pull a stat on that. I'm sure move more than like other areas as well. But you're right. Life changes. You're buying your first time home. You have a life change within. You're anticipating maybe 5 years, 6 years, 7, 8 years. Committing to 10 years might be enough to then kind of make your next decision and your next plan.
Yeah, it's not like the 30-year, conventional.
Yeah.
I know everyone, that's just, that's kind of like the main product. But I think now with conditions like this, it gets, gets buyers to really understand there's all these different types of products out there. Of course, the rates are higher, but then again, then that means come tax time, there could be a little bit more for you, to get back. And, I'm hearing, I think it's the same thing in 2008. The arms, people are like, oh
Yes.
no, the adjustable,
Yeah,
but
yep.
you know, like now I know there's a lot of people going, using those too.
Right.
So it's just,
Absolutely.
And 2008 was more like a subprime. They were doing like
Exactly.
106% financing. So not
Yeah.
only you're
Right.
borrowing 100%,
Yeah.
on top of that, the bank, these company was giving out additional 6% to cover the
Yeah.
closing costs. So this, unfortunately, no skin to the game for
Yeah.
the buyer.
Right.
But
Of
in
course.
today's environment, it's different.
Right.
We are making sure that they put in a good down payment. We're making sure their credit score is there. So these are good loans.
Yeah.
These are good products.
Now, have you noticed, like, and this I have no idea, but have you noticed that, say, like, down payments have gone up at all?
Yes.
Okay.
Yes,
All right.
yes.
So kind of like a security for the bank, if you will. Is
Yeah.
that part of the concept behind that?
Yeah,
Okay.
for sure. I mean, beginning of this year, I actually seen more people only want to put 10% down.
Okay.
But because the rate has gone up quite a bit,
Yeah.
and so they're putting more and more down payment because they
Okay.
want that monthly payment to be low,
Yeah.
to be comfortable.
Absolutely.
Yeah. But at the beginning of the year, it was in late last year, because the rate was so low,
Yeah, I
and they
know.
don't want to use their own money, so they put
Right,
10%.
It was
Totally.
free money.
Yeah, it was.
That's
Free
what
money.
you're
It
It
doing.
was there. Yeah.
Absolutely. So, what do you think? I know you've been with Citizens Bank for a while now. I mean, we talked a little bit about some of the products. I think that was great. I could try to rattle them off again, but we could also we'll put them in the description in
Right.
case I missed something.
Exactly.
Of course.
But I mean, what do you think sets Citizens apart, really, from like when you were, deciding you want to stay with Citizens? Because I mean, I'm sure there's tons of other banks out there. So, what's your thought in terms of what makes Citizens different? Customer service, obviously,
Right.
is very important. We know you're good at that.
Thank you. Thank
You've
you.
been
Thank
very
you.
helpful.
I
Definitely.
tried.
Yes.
Thank you. And I think with Citizens, I wouldn't say we're the new kid in the block, but we are, fairly new compared to Chase, Wells Fargo. So we're here, and we're here to make a statement. That's why we purchased the branches at HSBC. We're
Yeah.
purchasing this. We're here. We're here to stay, and I wanted to have a solid footprint. And,
Yeah.
and the program that we have right now, I think is very creative. We always try to make a deal work, make sure that it makes sense, right? We're not gonna be lending like what happened in 2008.
Yeah, sure.
But if it makes sense, we're trying to, get the homeowner to get their dream homes. And that's why we're here to help. That's why
Yeah.
we're here to assist.
Absolutely.
Yeah.
Well, and I will say from working with James before, he's very responsive. So, I mean, I know if I've texted you, called you, emailed, like you're right on top of it. And I think from a broker standpoint, like that's one of the things that is critical for
Right.
us
Yeah.
because
Yeah.
you client customer service, and even especially in like a changing market, you need somebody who's going to be accessible, available, and creative in terms of trying to figure out how to navigate and
Yes.
troubleshoot to get
Yeah.
you the home that you want at the end of the day.
I firmly believe this is a teamwork because
Yeah.
you're helping the buyer.
Yeah.
This is one of their biggest investment in their life,
Absolutely.
right?
Yeah.
So you
Yeah.
want to be there. You wanted to as a big team, and you wanted to give them the experience.
Yep.
So they're and that's they're happy. Everyone's happy,
Yeah.
and that's what the end goal was. Right?
Yeah.
Absolutely. I
Totally.
think I said it once. You don't have banker's hours. Like you're.
You have
I see
broker
that-
hours, basically. I
Exactly.
see
We
your
pulled you over,
response.
right? Yeah, exactly. No, but that's so the
Yeah.
communication is key because
Yeah.
we're on the front line too, on terms of the buyer. So to know that that email is going to get responded to or that question is going to get
Yeah.
answered, that helps us.
Yeah, absolutely.
Of
It's
course.
huge.
Yeah.
And my last question, which is a fun one, I always like to ask
Yeah.
this. Where is your, favorite place in all of New York City? Like your zen spot, your hiding place?
Wow, that's a tough one. I would say fall in Central Park. I love the
Okay.
leaves. I can walk down. I get my peace, and I
Yeah.
can jog.
Okay.
Love it.
Yeah.
That's my favorite
Yeah.
place.
Nice.
Yeah,
Yeah.
yeah.
I walk by it
That's-
every day. I love
Yeah.
it. It doesn't get old. Yeah.
Yeah, absolutely. Yeah, Central Park is definitely a classic, and you're right. Like right now with the leaves falling, the changing of
Yeah.
colors,
Yeah.
Gorgeous day out today. So we have to take advantage of that while we have it. For sure.
Definitely.
For
So-
sure.
Awesome. Well, thank you so much for taking
Well,
your
thank
time.
you. It was all
with
my
us.
pleasure.
Yes.
Yeah, thank you.
If you have any mortgage lender needs, feel free to reach out to us. We're happy happy to connect you with James. Citizen's been a huge resource to us, and we hope to be able to do more deals with you in 2023.
Yes.
All right.
Thank you so much.
Thanks. Thank you, everyone.
Bye.
Bye.